Hey, everybody, Joshua Phillips here with Churchill Mortgage. It is Friday, February the 6th, and I hope you're doing well. We are thawing out here in the Nashville area after all the cold weather and the snow and ice, and it's a beautiful day. I hope it's a beautiful day where you are as well. Well, this is where we put together some market updates every couple weeks coming from Joshua Phillips with Churchill Mortgage. Also, oftentimes my wife Amy and sometimes my son Jesse send those out as well. We are the Phillips team here at Churchill. I always like to say, if you're working with the Phillips team, you're in great hands. Well, let's get right to it. So, I typically like to start with a headline from CNBC. I searched mortgage. Several headlines here, but nothing. That one was saying there's more. First one here was saying more home buyers. Uh, than expected to have higher mortgage rates, obviously, from what we've seen the last 3 years. Um, the rough weather is saying really hurt mortgage demand. Rocket CEO said they're expecting this to be the best year we've had. I would agree in the last 4 years. It's been a kind of tough time in the mortgage industry. And then if this is 3 weeks, this goes back a couple weeks. We're saying higher interest rates swell to the highest level in 3 weeks. We did see I think I talked about it on last market update. We did see mortgage rates go up a little bit. Now, while we're still here on CNBC, let's pull up the 10-year Treasury yield. That is where you can look fairly directly at what's happening with mortgage rates. We want that 10-year Treasury yield to go lower. And, we've just been fairly stuck. I mean, if you look at this is what a one year chart, actually yields are up from November when we briefly hit 3.99. Rates had improved, and we're seeing things. We've been in the, you look at the 4.1 to 4.3 for several weeks now. For probably the last 2 to 3 months, we've been kind of stagnant, not seeing 10-year Treasury yields move much, which kind of reflected in mortgage rates. So let's flip over here to our mortgage-backed security chart, which is really where we want to look most directly what's happening with mortgage rates. As I always say, green is good when it comes to mortgage rates, and red is bad. And the higher the security price, the better mortgage rates are doing. Mortgages are bundled and sold as securities, and how the demand for those and the price of those reflects what's happening with mortgage interest rates. And I always think it's just a great way to look at, kind of the picture's worth 1,000 words. Again, we want to see the higher price. And we can see here really, and this charts with what I've saw, January 9th was the best day for mortgage rates in the last 3 years as we spiked up. And then we kind of hovered in that for, 3, 4, 5 days. And we've kind of come down a little bit. And now, this week, yesterday was a really good day. We saw mortgage backs up like 30 something basis points, 37 basis points, up a little higher today. If you're looking for technical analysis, we have moved above all the moving averages, the 25-day, 50, 100, and 200-day moving averages. We have popped up above those. And so that's good. Maybe we can get back here to the best levels of where we've been. Now, keep in mind that when you're looking at the range for, let's say, just the last, 6 weeks, that is like an eighth of a point, maybe a quarter point in interest rate. Interest rates are not moving very much. And so, yes, I mean, things are improved, but maybe we're talking about an eighth of a point off the lows, and maybe we're an eighth of a point off the highs. I always like to pull back here. If we look at a 1-year chart, we did have that period of time where we did see mortgage rates get, significantly better, and still kind of, trending in the right direction, but kind of flat this year where mortgage rates haven't moved much. And frankly, we could probably take it all the way back to, last September. Have mortgage rates moved more than a quarter of a point up or down since last September? Not really. So, we're in the best place or near the best place we've been in 3 years, but not a lot of movement. Looking ahead, obviously nobody can tell the future, but if I were to guess, I would say, this maybe more of the same. We may see rates up a little, down a little. I don't know this is going to be a year where we see significant rates, see rates move significantly better or worse. probably around 6% is where we may end up. If we go here to Freddie Mac, their weekly survey, let's pull that up real quick. It's got the 30-year fix at 6.11, the 15-year at 5.5. It's actually pretty good, not bad. And if we look at back over like the last, again, since September, pretty flat. So, hey, we'll take it though. It's been a pretty good week for mortgage rates. Let's say we've gotten an eighth of a point improvement this week. We'll take it. And obviously, we'll hope for even better things next. All right, if you want to talk about your specific interest rate or you want to talk about getting pre-approved, we are here to talk with you and work with you in any way we can. Have a great day. Bye-bye.